Hey everybody, welcome back. Hope you're having a good day in the markets. My name is Mike Fairborn and welcome back to Markets and Sectors. Look forward to our discussions with you. Today I'm joined in the chat by a good friend of mine, Connie Hill. Folks, any questions, comments you have, those are in the chat and we'll be happy to address those. I'll keep an eye on those as well. Encourage you to follow Connie and I on X if you'd like. My handle is Mike Fairborn CS or Connie Hill CS. Encourage you to follow Connie. She's got some really great stuff out there and would love to have you guys on board if you are in fact interested to do so. But with that, did want to talk today about, finding momentum stocks in the market. So taking a look at markets, sectors specifically, but seeing, where can we spot and how do we spot specifically momentum areas in the market? If those companies that might be moving, those stocks that might be moving very, very soon. I've got a couple of different approaches. I don't think you've seen either one of them yet on how to do that, but I'm talking about like what's moving as of like right now, as of today type stuff. So I want to tie that in to our market discussion as well as we break that down. But good. Once again, great to have you all here. And let's do this. Let's start off with some disclosure items to get going here. All right. So first up, wanted to state that information here is for general information purposes only. Oops, sorry about that. General information purposes only. And Schwab does not recommend the use of technical analysis as a sole means of investment research. Okay, the paper money software application is for educational purposes only. Investing does involve risks, including for some products more than your initial investment. So please keep that point in mind. Also, as it states here, a couple of different notes along the bottom here, as it does relate to futures options trading. Those services are provided by Charles Schwab Futures and Forex LLC. Now, a quick note on that: we do take a look at some of the futures within our class here. We will look at futures, but we don't look at anything more than just like the charts themselves. So just keep that in mind. Okay, next chart, next set of disclosures here. Okay, and want to state that past performance is no guarantee of future results. By the way, it does state too that historical data should not be used alone when making investment decisions. Okay, so on that, welcome to all of you. Good to have you on board. Seeing you in the chats here. Excellent, folks. Let's take a look at our broader picture of the markets right now. We'll break this down into more detail for you in just a second. But taking a look first and foremost, actually, we're looking at the S&P 500 index, pulling back a little bit, coming off just actually recent highs over here. So it is interesting. We are already, though, getting a pullback from that level. And we're going to see what does happen down here. Broadly speaking, we're in a longer term range, but hey, it's not really the end of the world here when you have a strong run up and a bit of a consolidation in here. It's okay. It's kind of like a longer term. I would even call it sort of like weekly, a weekly type possible flag pattern that's coming in over here that you might see on a weekly scale. In fact, instead of just saying it, I'm just going to go ahead and throw that out here for you. Kind of flipped over here on my chart. Just got to flip over one to the right, and you kind of see that. Let's just zoom into that time frame. But this is what I'm talking about. It's kind of like, here's kind of the move up. These are weekly bars now, and here is a sideways move. We're still in that range, kind of that Darvas box is an indicator that's out there, but the kind of a sideways channel. We'll see what we get off the tops and the bottoms. We're kind of like sort of in no man's land here. We're sort of in the mid range of this level right now. But if we were to get a reversal through here, you know what we're getting? We're getting a higher low. And a lot of times, if you are going to attack an area where there has been that resistance, and that resistance has been strong. These are weekly bars over a period of time. This is going all the way back to really end of November, first part of December. If you can get a higher low here, we might position ourselves to break out a little bit higher and to run. And that might be contingent too on what's happening within the broader market. In fact, if we come over here and take a look at this, let's go Market Watch tab, and we're going to go right into calendar now. What I wanted to highlight here for you was the following. We do have earnings coming out And we got some earnings as of today, and one you might recognize. Let me just draw a little arrow right down through here. There's a company that we've had eyes on for a little while, haven't we? We'll see what happens here. This can, I mean, it has previously, we don't know if it'll happen again, but it has previously made an impact on the markets. That today is, as it states right there, along with all these other companies after the close. Again, I'm just looking at S&P 500 stocks, main tab, market watch tab, sub tab, calendar right there. But hey, you know what NVIDIA does can play a key role in what the markets can do. And I would say, when I say markets, I might even be specifically talking about, yes, indeed, the NASDAQ 100 that has pulled back a little bit here, but also you can see somewhat of a sideways channel here too. And we're kind of sitting in this range. I want to explore the markets here in just a moment as we look at the possibility of being overbought or oversold using a broader market indication. One I don't know if you've seen before, but it's something that occurred to me recently that could be pretty interesting. Before I do that, quick peek at NVIDIA. NVDA right there. And there you have NVIDIA. In fact, with NVIDIA, it's interesting. We did have this gap down right there, right? We had a gap. And I believe, you guys tell me if I'm wrong, but wasn't that the Chinese Deep Seek AI that came out? I thought it was right in that time frame. If not, it was very, very close to that time frame. But here is a look at NVIDIA right now. There's your earnings. We've seen some recent volatility which by the way, has perhaps impacted the market a little bit. There's a dip back down here, but if we take a look and talk about market weightings out there, how might NVIDIA or something weight into the market? Here is a heat map of the S&P 500, and look over here. Well, it's a pretty big block, isn't it? These the blocks, the sizes do account for the weighted portion of the market. You got a couple of big other big ones in here. You got Microsoft, Apple. You've got Meta down below, as well as Amazon over here. But NVIDIA clearly a player in that group in terms of weighting that index. So a lot could play come into the mix there. There is the NASDAQ 100, and there is NVIDIA right there. So good news, bad news could play a role for market direction. Just keep that in mind, because that is after the bell. So in less than an hour, the market closes, but we'll see what time they come out with. By the way, I'm sorry, before I go off of that, what were they guiding? Cool, we can come over here, just take a look at it. Oh, it's not showing a guidance there, is it? A guidance number. There is, let me see if I go back to this calendar. No, we don't have an earnings estimate for it. Okay. All right. I'm sure there is like a street number out there, but just something to be mindful of. Okay. Well, let's do this. I'm going to dive on back here, take a look at SPX, and see how we're doing. Dom says, hey, forming a W pattern. Was that NVIDIA you're talking about? Real quick, I'll pull that back up. Okay. Yeah, there could be some of a W in there, right? And those W's, they're not always they look exactly like a W, but there could be some of those in there for sure. NDX as well. There you go. Oh, maybe it was this as well, because you can kind of see this sideways move. And, this can be interesting. In fact, I was looking at this over here real quick, Dom and everybody, but this could have been like a shoulder, head, and shoulder over here. Of course, when we broke above our neckline, ooh, bad neckline draw. There we go. What did we do? We didn't hold. In fact, we failed, but we're in a larger consolidation, and we didn't break lower either. I mean, we're still at that interesting level of support right there. So keep some eyes on that perhaps as well. All right, well, let's do this. Let's step back out and take a look at the S&P 500 index here. And I want to talk about some of the weightings. One of the biggest moving averages out there, one of the biggest technical indicators that a lot of technicians will use. In fact, institutions have talked about this. Big funds out there have said we don't use a lot of technicals, but we do look at the 200-day moving average, and they look to see where the markets are at relative to that. If you're above the 200, it's bullish. If you're below, it's bearish. I wanted to tie into that a little bit, though, as we look at the 200. Let's just throw it on right now. The simple moving average right there of a 200. We'll get that nice and thick so we can see it. We are going to be above that moving average. We're going to be above it. implying there's still bullishness. And you can kind of see how we've been sort of holding up in this range. And this has been here for quite some time. Now, let's step back. I'm going to add to this 200-day moving average in the form of a Bollinger Band using, though, the same 200. And what I'm really looking for here is I'm looking for a standard deviation, right, as it around that 200-day moving average, but the standard deviation, just abbreviating these a little bit for short, standard deviation using statistics, what is a standard deviation of 2 below and a 2 above? Let's put it on right now. The 200s are going to mirror themselves. In fact, I'll clear, oh, okay, so that's all cleared off. Let's add it in right now. So we're actually going to take an indicator that's used by institutions fairly frequently for bullishness and bearishness, and we're saying, okay, where are we using the standard deviation up, standard deviation down? What I wanted you to think about in this regard, as I brought up earlier, is where might the market be considered to be overbought, or oversold? There we go. I oversold, overbought. In other words, we're a 2 standard deviation above our 200-day. We're a 2 standard deviation below our 200-day. Let's take a look at this long term and see how this pans out using something like a 200. Now I just need to share it. There we go. Okay, we should be good to go. I'm going to put the widths in a little bit bigger. We'll go with, okay, let's see the midline. Midline's fine. It'll just be the same standard deviation. Let's go red on the bottom, green on the top. We'll make them nice and thick so we can see them. 3 should be good. And shoot, we could just choose 3 over here with a different color, blue. Okay, where do our standard deviations lie? There they go. There they are. Now, when you look at this, just using statistical methods, sometimes, we're up at a higher level. In fact, I'm going to back this out so we get a little bit more data in here too in terms of timing, distance, I should say. So here's a 200, 2-year, I'm sorry, 2-year for our 200 Bollinger Band with standard deviations. And a lot of times, hey, when you're up approaching this top area, you can see some strength, but be mindful. We're a little bit in the, RPMs are maybe a little bit high in the market, okay? If you're coming close to it, these are some areas where you can get pullbacks, okay, with that 2.0 standard deviation above the 200-day. Now, here's the interesting thing, is when you are above the 200, which would be considered by institutions, right, to be bullish, which is what we are right now. We're above the 200, clearly above the 200-day, but not above the 2 standard deviation up top. In fact, we're not close to it. In fact, you know where we're at? We're basically almost in the middle of these 2, maybe a little bit closer to the 200-day moving average. This is one way to potentially look at this now that we have a standard deviation upon on that 200-day and a history of performance too. I'm going to back this out to a little bit longer term scale so you can see how many times we've touched off that standard 2 deviation and pulled back. But also, when we are in the middle of this range, where's the trend? The trend is up. I'm drawing this kind of sideways, heading on higher because the trend is higher. Now that's an indication that the trend is on our side. I mean, nothing's a guarantee, but as you can see, the trend is up. We're above the 200-day. So positive, potentially, right? In terms of an expectation. Not up in the upper area up top here, not up here, not into this range, but right where we're at. Now, all I wanted to do was look at some of the pullbacks in line with the trend and above the 200-day and just see what price action we had over that time frame. Here we are. We're in between that range. What did we do? We bounced. Will we bounce again? It's in line with the trend, but it's kind of in an area we've been hugging, is what I'm trying to get at, is we've been really hugging this mid-range a lot between the standard deviation and the 200-day. So keep eyes on it. Let's see what happens. Let me back this out too. That's all I really wanted to say here. I did want to show you this on the NDX, and I'm going to back it out to a longer time frame. There you go. So hopefully this can give you a reference point to look at too. What's going to be kind of fun too is to look at a longer term time frame. Let's do that right now. In fact, I'm going to go to a 10-year. I'm going to click the right one in a second. There we go. There's my 10-year daily. Boom. Okay. This should be interesting to come back and look at the 200 touching off some of these bottoms here and bouncing, getting above the 200. That was a massive reversal pattern right here off the 200. I mean, look what the Nasdaq did over there. That was a substantial run for the market. In other words, we went off the bottom, we got above the 200-day, and we started trending, folks. Higher highs, higher lows, higher highs, higher lows, and we held, but yet the tops were kind of coming near this level. It's not to say it'll be the exact top, but it's an area you want to watch for sometimes resistance, possibly. All right. Well, I want to show you that. Again, the 200-day there. Oh, and then, yeah, we were looking at the SPX. I'll take it off here, but it's just stepping up, using a Bollinger Band on a longer-term scale, seeing what it can deliver for us from a specifically really looking at a market perspective. Leon says maybe balance on the 1 standard deviation. Yeah, perhaps. Leon, exactly. Throw the 1 in there if you want. The 2 is kind of the default for the Bollinger Band, but it's really interesting, just looking to see what you're getting in terms of the volatility of that move, up or below a key number, let's say like the 200-day moving average. That's just used by a lot of individuals. Oh, and Ronk says the Hindenburg hats. Oh, cool. We're going to make it. We're almost there. We're getting there, Ron. Thank you for that. That is good to know. We're on our way. All right. Well, a couple things. I wanted to look too at the dollar, the US dollar. Okay, the DXY, the index, the US dollar index here, and look at that. Now, you can see the dollar coming down here. Now, the dollar, a lot of times when you're seeing weakness in here, you might see strength in commodities, you might see strength in materials, but also, that's where it's cheaper for people outside the U.S. to buy our goods. Let's see what does happen here. I did notice that there have been some runs in gold a little bit, just as kind of a side note. Gold has been strong and kind of expect that maybe with a stronger dollar. You can see that this is kind of inversely correlated to the dollar. Gold, GC over here, /GC for our gold futures, has been quite strong and holding up. We'll see what happens with the dollar. A quick look at the VIX, and we'll dive into more on that right there. Okay, so there is the VIX. All right. Now, one final note. Remember we were talking about the VIX last week, getting above, let's say, a 20 or 25 range. Well, where's the VIX right here? I'm sorry, a couple of weeks ago. But yeah, above 25, we're still below that range, but the VIX is a little bit higher here. We did spike up with the market coming down, but you'll notice with the VIX, which is inversely correlated to the markets generally, right? Look at the highs over here. There have been some resistance, and I think you can do this with the VIX. This is actually one kind of area where the VIX has tended to top, especially this year, 2025. We came up here, we hit that level, we dipped. Will we dip again? That's the question mark. If so, if we do see a dip here, we might see the S&P 500 shoot up, which would be right in line with our range here as well. All right, a lot though, like I said, just finally, last note here before we dive into some sectors, then look at momentum on individual stocks. But I did want to say a lot of this can be due to earnings coming up. And here are, earnings looks just packed too, as you can see, for the next couple of days as well, going out for even a little bit further into next month. So we have a lot of earnings which could determine the direction of the market, right? If earnings come in strong, that can play a key role. Now, with that, let me just go ahead and share this right now. This is I sent this out as a tweet, if you guys want to if you find this useful, but these are all the companies in the S&P 500 here. S&P 500s, S&P 500 that had an earnings surprise and that have been performing. That's the surprise that had been performing. But at when I say the last 7 days, what I wanted to do was actually give you Monday, Tuesday of this week, but I was out last week. So, and it was all of last week too. So Monday, Tuesday this week, and then all of last week. I just had it for the last 7 days. These companies beat their earnings expectations. In other words, it was an earnings surprise. And this right here has been that 1 week performance. And they've beaten over different time frames, just so you know. I mean, some of them have beat, reported a couple of days ago. Some have reported as far as 7 days back. But this could be interesting too, because as I brought up earlier, what I want to talk about today was momentum in the markets, momentum stocks in the market. Although I'm going to be looking at a technical indicator specifically to help us spot what's going on right now in terms of momentum. In case we do spike higher, there are some companies that are showing strength right now. Earnings is one way to do it. So if you want to take a look at this, I can go ahead and just share this. Well, I'll tell you what I'll do. I will just share with you my my X handle, and if you want to take a look at it, it's there. Definitely encourage you as well. Take a look at what Connie's got. She's got some great stuff, but there is the X handle right there if you want to check it out. You can see those earnings surprises listed there as well, because those could move the market, and those are showing additional strength above the market. I think Baxter was a big one. I think that was top of the list. There you go. Maybe a change in long-term trend for Baxter. Who knows? I can say this, that's a higher high and a higher low. And we'll see what happens. It's a medical company, right? Let me see. I thought so. Healthcare. Oh, yeah. Okay. So medical products and healthcare systems. So it's a little bit on the medical system side. Anyways, that was one of the companies there, just as an example of what we've got. We don't know what it'll do going forward, but it did beat earnings. You can see right there, the surprise was pretty substantial. 51.6, about 52 cents to 77 cents actual right there. Just pointing at the earnings. All right. Well, let's do this. Let's move on in to some sector analysis. And I want to go back to our quotes over here. I want to pull up S&P 500 sectors so we can do a little bit of a dive on those sectors and see what's going on over here as we've got this pulled up. Oh, we've got some TTM squeeze bars actually showing up. These are just ThinkScripts that I discuss a lot of times in the swing trade class as well as the ThinkScript class on Fridays, but I didn't know we have TTM bars on these sectors, which is interesting. The TTM squeeze showing up. Anyhow, let's do this. Let's take a look. I want to show you guys this too. If you're not familiar with it, I wanted to see what's really been moving in the sectors. First of all, just from this perspective first, just looking at the different columns and see what we've got. Obviously, we got the change today, but if we right click here, we can actually go to some new indicators that have been added. I don't know if you've seen these or not, but all you want to do is just type in PCT. And now you don't need ThinkScripts to do this for you. Do you see what you've got? You've got a 1 month. I want to add that one in. Pull this guy up. We've got there's a 1 month change. There's a 6 month change. We have a 20 month, a 20 day. We're not quite, oh, sorry. That's 20 day. What? 20 day, 1 month. That would be the same thing. If that's market days, that's like a 1 month. Anyways, you can change them too, which is interesting. And these are all, just type in PCT and you can add these in. I've got my own in here too. I'll just put in a ThinkScript here. It's just a 1 week right here. So we got a 1 week, a 1 month, and a 6 month. Let's see how that fares for our sectors specifically. Widen these out and let's see what we got going on. Oh, okay, so these other ones aren't colored, and that's one thing you'll get with the ThinkScript, but that's okay. We can still see what our numbers are, and we can click and see what's really been performing the best. So over the last 1 week, even as the market's been weak, the pullback that we saw, you can see over here, healthcare has been quite positive. Consumer discretionary has not loaded yet. We've got some others in here. Let's see. The next strongest one is real estate over the past 1 week. Percent for the 1 month, double click on it, consumer staples. So, and I would say consumer staples in healthcare, if we're looking at 1 month, you got real estate sticking right in there, but you got three, only three, these three that are positive right there. So this can be an interesting way to kind of track the market too. A lot of times traders will say, well, what's up on a 1 month? And how does that play out for possibly a 6 month? Because sometimes your 1 month or your 3 month, they might be 1 month strength might translate into a 3 month strength, into a 6 month strength because the trend is up. The trend is higher in these areas, perhaps. See what we got. But let's take a look at those right now. Those two, I want to look at real estate as well, but those are really doing actually quite well. Now, what had been doing really good, as we'll pull up the charts here in just a second, was consumer services had been strong, weak there, and information technology, one of the weakest ones. The weakest, though, is consumer discretionary. In fact, our consumer discretionary numbers came up. No, they didn't. They still didn't pop up over here. But you can see what we've got now. Lastly, let's just do this real quick. We've got our 6 month, and discretionary is at the top. Consumer services and financials have been the top three leaders. But the new ones coming up, if there is a change, perhaps, maybe these would be the new ones to keep an eye on, especially if the trends have changed. Consumer staples and healthcare. Let's go right over here and take a look at charts. And what we'll do is we'll go right into our sector grid with all of those same sectors just listed here so we can see it. And what you are going to spot is exactly what we looked at there. What's nice about the charts is we get to see the visual. And this actually on consumer staples, that was a longer term kind of a flag pattern, and we began to break higher. So we saw some strength there. Now, healthcare, very, very similar. This is a flag, and we began to break higher here too. But notice infotech, yeah, dipping. Be mindful of that. Dipping consumer services. Again, earnings could have a key role here. We talked about NVIDIA possibly playing a key role. Yes, I can share that TTM squeeze bars. Yeah, I just caught that. Absolutely. Let's do that. Oh, the PC, those are already there for you, Leon. So good questions coming through. I'll quickly save this, but by the way, before I do that, just let me finish this one topic. I'm going to right click here just to show you on consumer staples. We'll pull this up a little bit longer term. That's a 3 month is all we're looking at. So you can always go in here, you can lengthen these out. There's a 1 year. And this was kind of the sideways trend we saw. Long-term possible flag pattern. Let me draw it out right over here. Here is your consolidation follow through. We've broken higher. Okay. So we'll see if there's a rotation. The market still looks, kind of generally strong as we looked at initially with those Bollinger Bands. But here is healthcare. Healthcare, you can see a possible change in trend, higher high, higher low from this point right here. And is this the flag follow through? Maybe a little bit of resistance right here, but can it extend higher? That could, if so, that could be interesting for this entire group. So keep eyes on that as well. Okay, let's do this. I want to jump back and let's take a look at those, each of these. Here is that TTM squeeze. Customize that. Oh, let's see. I'm sorry. I got to click on the edit the formula. And I will share that right now into the chat for you. Okay, I talked about the TTM squeeze yesterday. If you're interested, that was in the swing trade class. We went through that. We actually did the squeeze at the end of the flag on actually a couple of healthcare stocks. Just practice examples is what we looked at there. As a side note, but there it is. Into the chat. Just a quick note on that too. They're not guaranteed for timeliness or accuracy. And let's see what else we had. Leon, yeah, these over here. All you want to do to get these PCD, these are not scripts anymore. This is part of the platform. So you can right click up top right here, go down into customize. And this is where you can fill in those columns there, Leon. So just go over here, just type in PCT. They're automatically there. So now you don't need actually a think script for these different percentages and the different columns. And by the way, I think you can change them too. Hold up. I think they are, if I want to put this to a 3 month instead of a 6 month, let's view the formula and see what I can do. And Yes. See that? This goes back 135 bars right there. I mean, what's 3 months? Well, it's about half that. So I about 60 to about 65, I guess, or so. Right in that range. 3 months is generally 65. So these can be changed. You can see you can't alter it as near as I could tell. So that's nice too. We could add a 3 month in there if we, change it if you wanted to, but it's there for you. Cool. Yeah, you can click. There is over here a little bar, I'm sorry, a little wheel to the right, and then you can click customize. That's just a left click. But whether you're on a PC or a Mac, right click on that column and you'll get that down. Okay, so a couple of things to look at. Let's go ahead and take a look at our general overview, market sector review of the markets themselves. I wanted to state over here too, we didn't quite get to the minus 100 on our McClellan oscillator. We're close to it. But as we dip below the minus 70, 70, we did still go sideways for a period of time. And that's okay because the McClellan oscillator is 2 to 3 weeks. The key thing here is notice there's not a lot of change in our advanced decline line. Advancers, decliners on the broader index, the NYSE, it's going flat. What could be risky is if you started to see a breakdown here as prices were kind of sitting sideways, but we're really holding a higher range, are we not? Look at this. We're really quite high. In fact, I think Leon brought previously up that W. You can actually see a W pretty good over here. Sometimes those can be continuation patterns. Well, we'll see if that increases on advancers versus decliners. But there you go there. Going forward, SPX EW really holding solid. This was a strong recovery. The SPX EW is equal weight. So it didn't put all that additional weight on technology or communication services. In fact, it was more broad, it was a broader mix. And that included, some of those income type stocks, right? Some of the value stocks that we might see in consumer staples or healthcare. And we've been holding sort of like a flag pattern here. But guess what? We haven't seen a move yet out of it. And some traders might be saying, yeah, there might be a broader move in the S&P 500 index, but we're probably going to have to take out first these highs right there to get above. And then you can see like a possible flag pattern unfolding on the SPX EW. We're just looking at the equal weight there. Okay, now here is the another view of just the NYSE itself. About 2,700 stocks in the NYSE. We're coming up to a prior high. That really does kind of have that W, doesn't it? And these can be continuation patterns because the trend is still up. And technically, I mean, this is a higher low, higher low, higher low, higher low. Can we take out what appears to be resistance here? This could be a fun one just to put an alert on because we've been stuck here for so long. Hey, give me an alert. I'm going to right click right there. Give me a custom alert to text me. I get those alerts in about 3 to 5 seconds after they get triggered, right? Right over here. And I'll just say, breakout, question mark. Okay. A lot of times the NYSE can lead the S&P 500. And a lot of these indicators are based upon this, the McClellan Summation Index, which has been up, but it's kind of sideways here. We'll see what happens. Again, to get this to text you or to email you, go up to Setup up top, right-hand corner, Application Settings, and then what you're going to want to do is go to Notifications and just click in and add your text number in there and an email right there. It'll say something about a standard text rate if you get charged for text messages. I mean, but yeah. Anyhow, I don't know. For my phone, I think most people just get those free. But anyhow, just as a little side note, it'll give you more info when you click on that. But just a great way to get those messages coming through. Now, when we look at the Hindenburg, a lot of times what we want to do is we want to look at a longer term. In fact, it's normally viewed on like a 3-year time frame and weekly. And what are we getting here? We're getting some omen spikes. And what this represents, and it was put into the chat earlier, which I appreciate. This represents 52-week highs and 52-week new lows, a fair number of them happening at the same time. And when you get that sort of chasm, that divergence in the market, it can lead, and it has preceded, breakdowns in the markets previously. And that's what that almond is very, very helpful in doing. Now, what we've said in this class is it really becomes more important and apparent when you get a change in trend. In other words, right now we're in a sideways range, and this all else equal is a positive. We're holding this sideways channel. Where it gets a little freakish is when you start to break a low, or you make it, just whatever it looks like, a lower low and a lower high. That's when these play a role, because then what you can do is start getting those 52-week new lows really expanding. But it can be a sign of negative momentum. In other words, that negative momentum, folks, can kick in. It can kick in if the trend does change at that point in time. Here is a 5-year weekly, because I did want to illustrate what that looks like when the trend kicks in. And you can get an extended pullback. Notice over here, look at all the spikes. We're just going to correlate these. I've shown this about 5 times previously, but it is a good example of when this can really, have a little bit of a force. Lower lows, lower highs, the spikes, continuation of the downward trend with some acceleration right there, I might add too. Now look at all these other almond spikes. What do we have over here? Okay, we got the spikes. There was a possibility of a change, but guess what? Still, we got a new high, we got a higher low, new high, higher low, which really kind of offset these. Now we're getting a few of these here, so it could be positioned for downward momentum, but you've got to see a change in trend. And I showed you early on what the S&P 500 looks like with that Bollinger Band. So you have some key areas to look at, namely the 200-day moving average. But like I said, earnings could play a key role. I want to tell you guys this. Oops, sorry. I'm just going to draw this out just so you can see something on our screen right now. I did a little investigating specifically on the possibility of the market pulling back. Now, you guys, I know you do follow, say, for example, many of you heard of Warren Buffett, if not all of you. We're talking about cash and, I would say, treasuries are short-term. I'll just say short-term investments, which is like a short-term INV investments. He's got right now his portfolio, 30% of it is in cash or short-term investments. Now, I was just looking at the total percentages, which might make more sense than like a total dollar amount. Does anybody know the total dollar amount? Throw that in the chat if you do know it. But 30% he's got in cash and short-term investments. Say, like, for example, treasuries, things along those lines. Okay, any guess? This is 2025. Now, when we had a crash in the market in 2000, or back in that time frame, and the markets were really taking a dive, what percent do you think he had? Any guesses over there? What do you think? I mean, that was a time where, it was a little precarious. We had, what was it? It was the dot-com crash, but there were interesting things as well, like the Y2K scenario as well. Oh, thank you, Alexis. 260 billion. Okay. He had 2000 cash and short-term investments. Alexis is 50%. Yeah, I was thinking a little bit higher myself. Approximately 29%. I'm going to put approximations because it's not going to be perfect, right? Very close to the same numbers. In fact, he's got approximately 1% higher right now in cash and short-term investments. And normally when he does that, he's anticipating volatility in the market or whatever the case might be. Okay. All right. So there you go. So it's kind of just a side note as we're talking about, and I'm not trying to, freak anybody out with these omen spikes and say, will it, but we want you to be, something to be aware of, clearly. So be mindful of that. And then let's see, Luke says, hey, could we have the script for the color version? Oh, yes. Yes, you sure can right here. Let me do that, Luke. I'm going to right click right there. We'll edit that formula, and I'm just going to share it right there. Okay. So share that. I'll put that in the chat for you. Again, not guaranteed for timeliness or accuracy. As long as the data that's flowing into the platform is good, these numbers should be good, and that can be changed as well. But yeah, I like the colors as well. Kind of helps you break it down a little bit. It's basically showing you the half range because you can see some of these that are negative, but it will give you kind of like that. The top half will be green, the bottom half will be red. That can be altered. That's the script I got from a long time ago. But if you wanted everything in green, that's up, and everything is red, that's something that I could, adjust in ThinkScript as well. Okay, now what I wanted to do is also talk about, we've been talking about different ways. In fact, everything we've discussed here today is really can be utilized to find momentum on stocks. In fact, as I'm coming over here, I'm going to keep these columns the same. So just as a highlight, stocks within these sectors, these could be interesting areas to potentially look at, perhaps. We went over here to our 1 month change, right? And click it one more time. Hey, what's in consumer staples? What's moving there? Because we're starting to see some strength that we haven't seen in quite a while. In fact, if you look over here, here's your 6-month weakness. Well, and not too strong, 2%, about 3%. Healthcare, really weak over 6 months, down 5%. But over the last month, we've recaptured a portion of that, right? In fact, it was down more than that because the last month's up 2.31. That's going to offset some of our losses on the 6-month. So we've seen a bounce into healthcare, and we saw those charts specifically. So these are interesting areas to find momentum in stocks, specifically, right? We can do that. We can also take it one step further. I'm going to show you guys a little scan that you can do using just RSI. In fact, I don't think we need to build a script. We don't even need to use a ThinkScript at all. I think it's pre-built. Go over here in our scan, and I'm going to drop this down to, and by the way, I am in the scan tab right now. Main tab scan, sub-tab stock hacker. Stock hacker right there. Let's go under here. I'm going to click on add filter. Let's go down to study. Now that's our default, but if you come down here, it's really cool. You can actually look at popular studies. You've got an RSI scan. So easy and simple to do. RSI, instead of the RSI, let's say greater than 70, you can say greater than 50. Actually, folks, I'm going to take it back. Let's do a quick condition wizard in here, and I'm just going to show you how this works. Go under study, and we're going to click on our little pencil over here, or pen to the right of the D. I'm going to pull this up. Now, I'm going to kill this ADX crossover, and I'm going to go delete. Now, we're looking at momentum. So if we want to see specific momentum in the markets, we can't just use the condition wizard. Let me show you how it works. Add condition. Price. Oh, let's see. I'm sorry. Let's see. No, it would be study. It's going to be the RSI. RSI crosses above, indicating an action, crosses above a value. And that value, a lot of times traders will say, we've talked about this before, if you're above 50 RSI, general momentum or strength in a stock. If you're below it, general momentum or weakness, I'm just going to go 55 in the last bar. So we just crossed above in the last bar above 55. So we went through 50. Now we're above 55. Folks, short-term momentum kind of at your fingertips is very, very close. I might even want to add one more condition. Let's just do this. Let's put it between a range. So let's just say it's not too, well, it's just crossed above 55. We'll keep it at that. So simple. Look at that. RSI crosses above 55. Now we can look at the S&P 500, or if we wanted to a particular healthcare sector, whatever. I'm just going to click on scan right now. How many of them did that over the S&P 500? Look, there's only 13 out of the 500 that have done that. This one beat earnings, and so did MDT. We talked about momentum in earnings beats. Well, they're over here as well. So be mindful of that, but this could be a quick way to pull that up. So I hope you found this useful, folks. There was a survey in the link. Folks, by the way, if you do like these concepts in this class, if you like this class, do me a favor, smash that like button. It really helps me understand that the content that I'm covering here is useful for you, and you like what I've got. I'd love to take any topic requests or suggestions. We've done that before. We'll do that again. I'll read through all the comments you've got here. But yeah, smash that like button, bottom right hand corner of the screen, subscribe, and then there is that survey link. Want to say thank you so much for Connie Hill, who has been here assisting with us. She does a great job. Be sure to follow Connie on X, Connie Hill CS. All right, everybody. It's been good being with you. We'll see you all next time around. Look forward to it.